Hi guys, so I just wanted to come on and make a quick video today, just kind of like a price action breakdown on USDCHF on today, Tuesday, September 10th. This is also the same pair that I sent in for the daily markups and valid trades, but I just really enjoyed this day of price action and I figured it was worthy to make an actual dedicated video for because I think there's a lot of elements which are critical for me to discuss in this breakdown video. So starting kind of looking at the previous day a little bit, like in like this whole area from the previous day into Asia session, just stumbled over my words there. Um, the first thing you want to note or mark out is your medium liquidity point, which is obviously yesterday's high. So if I do something like this, previous daily high, I'll make that a little bit bigger so you guys can see. Just when I trade, I usually use the small fonts. I like it better for some reason. Okay, so from this, what you can see is that Asia high collectively, just as a like a piece of price action, essentially like this whole range here, induces the previous daily high, right? So that's your medium liquidity sweep during Asia. Before that, another thing to note is you get this sort of larger scale fake break of structure here, which leads into the previous daily high being induced. So I'll go ahead and mark this as an FBOSS and I will make it slightly larger. Same with what I did for the previous daily high. Okay, so our medium inducement has been established, right? Previous daily high. It occurred when? During Asia session. So from that, right, you need to take that with a grain of salt and keep this in your head that Asia session itself is an inducement, right? So it doesn't mean that Asia high has to get taken because that makes no sense from um, a liquidity point of view. It took the liquidity. Why would they have to take the liquidity after taking the liquidity? You know what I mean? That move's done. Like that's the main trap set that we want to trade away from, right? So now we're looking at price develop after that, kind of towards the second half of Asia into Frankfurt session and London session. And the first thing that I had marked out was this bearish channel, right? And then for your channel, simply mirror it to the bottom side. And yeah, pretty straightforward. Um, a lot of you may ask, I've gotten this question actually, and I'm sort of quite surprised that I haven't. Why do I like using channels? And this is because it gives you a really good kind of quick glance that a lot of strategies are in the market in one direction, right? So when you have a channel, you have a trend line, obviously, like two trend lines, technically, they're mirrored. But it shows you that not only trend line traders are in, breakout traders are in, and break and retest traders are in the marketplace. Just at a glance, right? Very easy to follow. It's simple. I like to keep my charts simple. I don't like 1,000 things on my chart because I like to make trading practical, right? I think a lot of people get caught up in having a million things on their chart and thinking that it's making them a better trader when in reality, um, simply put, I'm here to trade to make money, not to have my charts look all pretty, right? So that rant aside, another good benefit of a channel is that it really helps you determine when the inducement is happening, right? So you have your channel. Obviously, we're not inducing out of the channel low, clearly, right? We only get this little wick through it. That's not an inducement. Nobody's really entering the breakout of the channel to that side short, right? But what we do kind of towards the middle of the first hour of Frankfurt session is we start to induce the channel to the high side, right? And when we induce high, it's to go lower. Remember the video I did on continuation inducements. This is the same concept. We induce the bearish channel high to ultimately go lower. This is a continuation inducement, right? Price isn't reversing. It's going to continue bearish, and it's continuing the same direction as this main inducement here, right? In addition to this, I'll zoom in a bit so you guys can see a little bit more. we get our fake break of structure, which is pretty clear and obvious, right? It's your first bullish structural shift after the inducement high brings in the bearish momentum, right? Pretty obvious. Coming into London session, right? We have the understanding that the channel is being induced high, right? So what do we get? We have our relevant break of structure here. And from this, now we can go on the 1 minute and start to pick a few POIs. Here you have this supply candle, last bullish candle before the bearish momentum. And then after that, you have a continuation here. Send that to back. All right. So from this, after you have your bearish, your bearish R boss essentially, valid to look for shorts now, right? Because we already have everything. We have the bearish channel being induced high to go lower. We have, as a byproduct of that, our F boss. After the F boss, we have our R boss, right? Signaling to us that we may be done inducing the channel high. We're ready to go lower, right? So there are kind of two ways that you can do this. You can either take the short here, right, just off the initial mitigation. However, I noted this in the markups that I did. I think it was in the valid trades chart for this pair. If you took this trade, you might have gotten hit break even here, just because it does retest that zone, and more than likely you would set break even once this low goes. However, it's still valid to take when it comes back and mitigates this supply zone, right? So in terms of what do we think price will do after this, and like what are we actually targeting? Obviously, that low is pretty straightforward, but that's not really a meaningful target. That's looks like 15 pips or so, less 9. All right, so that means we have to go back onto the 5 minute. I have to mark my SMT as well. What's nice about this smart money trap, is kind of like another pointer, is that price mitigates the smart money trap into our valid mitigation, right? So we know smart money traders are getting an entry because it mitigates their zone, right? So it's bringing in and generating more buy side liquidity for us to take shorts from or against, actually, right? So for us to determine our target, we need to look left. What's the next logical thing? If we view this leg, essentially, oops, yeah, this one, from here, right, and makes the new high all the way up here. Easily, we should just target this because it's the medium liquidity zone from the previous day's structure. If you want to get really fancy, you could, it's a very narrow channel, but you do have this bearish channel gets induced high to go lower, and even before it takes this medium liquidity point, it kind of fakes the equal lows, gives a false reaction, right? Same exact channel as the first one here. This one does not get induced low, it gets induced high to go lower because we induce high to go lower and we induce low to go higher. Speaking of inducing low to go higher, coming into New York session, we induce this medium liquidity point, which was our target for the sells, right? We induce that with speed and momentum, which is key. I mentioned this on basically every single chart I do because it needs to be emphasized that speed and momentum are key. You have to like think from a different perspective. If you were trading as a retail trader, obviously I'm a retail trader too, but I mean, when I say retail, I mean the strategies, like just collectively known like widespread, readily available strategies, right? Basically every strategy when you have massive candles like this is going to convince you in some way that the market is bearish. It's very rare for somebody to see massive bearish candles and view it as a good buying opportunity, which is exactly what we do, because for us to make money, we have to have a contrarian based mindset, which means essentially we think in an opposite way of the majority of people. This doesn't only apply to trading, it applies to literally every other business, real estate, um, whatever you can think of. You usually want to do the opposite of what the majority are thinking. If you're thinking about buying a house and everybody you know is buying a house and telling you how great it is to buy a house because prices are only going to go up, right? Probably not a good time to buy a house. Just wait a little bit, and purchase it once, it's an actual decent price and you're not paying $700,000 for an average sized home. Okay. A little bit of a rant there. Call that my ICT rant. But anyways, we have a bearish momentum to the downside during New York Open, right? So at this point, it's time and confirmed. Our target's been met. We have our medium liquidity. I'll mark this out just so I don't have to keep saying it. Okay. We're now ready to look for pullback buys, right? Pretty straightforward. If you look even further left, we take another point here too. Yep, we do. And yeah, it's pretty straightforward. And we also retest the previous day's Asia high. So it's just I don't use that too much, but it's just an additional confluence. It's a pretty basic break and retest zone if you think about it, just Asia high retest from the previous day. So from here, you want to jump down onto the 1 minute because now we're interested. Once price gets here, we're interested in going to a lower time frame because I only ever use the 1 minute when I'm interested in entering a trade. I don't analyze the charts on the 1 minute. I don't think it's very effective. I think it's going to get you caught up in a lot of noise that isn't necessary. So it's best to stick to the 5 minute, 1 minute for entries. And if you're really advanced, I guess, and you do testing around it, you can go lower than the 1 minute. But for the broader audience, the 1 minute is best. So hop to the 1 minute. You would not enter here because you have like no confirmations essentially that it's going to continue to go higher until it puts in this next high here, and then you have a demand candle with imbalance printed before it. So you just simply select it like this. Pull it across. And yeah, that's your buy trade right there. You're long. Again, super straightforward. And if you can use the 1 minute once you're in the trade to, actually analyze price while you're in the trade, but don't analyze it like as a whole before you enter the trade, because just glancing at this, you have your 1 minute channel. Just mirror that. Gets induced low to go higher, which is good because that's a continuation inducement, and we know that we're trading long. So if we induce the bullish channel low to go higher, that's a good thing because that means that price is setting traps in the direction which supports our current trade. There's actually a continuation trade in here too. I didn't think it was the best one just because I didn't like how the POI was kind of large, but you have this guy here. If you missed that one, you can take this one, just the down close candle, and include the wick. Make sure to include the wick before the push to the upside. It's very rare you'll ever see a channel get induced low or high. It doesn't really matter which scenario it is. And for it to come all the way back to the extreme. If it comes all the way back there, more than likely it's just going to take out the entire low, right? Just a quick pointer for you. It even had like the very, very small structural inducement before the mitigation, right? So in terms of target, if we go back to the 5 minute, the easiest target and the most logical one, if you're taking a buy from either here or here, and you want a really simple target, just target the nearest structural high. The minor structure. When I say minor structure, I mean same day structure. Medium is previous or previous days, and it's slightly more significant. All right, so this would be your target. Okay, these are trades I had sent in um, into the valid trades channel for the markup I did today for this. So with this short, you target the medium liquidity. With this buy, you target the structural high. The structural high also um, correlates with Asia low, and that's a pretty big um, break and retest trader zone, right? Drag it across, pretty straightforward. Support and resistance zone, whatever you want to call it. But yeah, I just thought it was a really clean day of price action, and I wanted to share it with you guys. And if you do have any questions, feel free to shoot me a message. I'll be happy to answer them. But this is a day that is very clean, and you need to understand. So if you don't do this on your own chart, and sit there until you understand the entire day of price action, because this should be very clear for you, especially if you want to get to a level where you're able to take these trades on multiple pairs day in and day out, right? But yeah, um, I'll make another video like this soon on a different pair. I just like doing like these simple breakdown videos. I like talking about price action. So yeah, I'll see you guys soon.